The success of our society proves that our system works, but maybe we forgot to teach our young folks that wealth is achieved by helping people to get what they want. So, if no one has yet taught you how the game is played in the big leagues, well, guess what? Now, it's your turn. Here's our rallying cry. There's a billionaire locked inside you. The key to freedom is information. The kind of information you find here on the MoneyMan Report. Now, here's today's host. Here's the MoneyMan. Here's Dan Frischberg.
Good morning, everybody. Welcome to the MoneyMan Report. Again, thank you very much for joining us. And this is, if you're listening to us on Spotify or one of those places, it's a podcast, and we love to have you with us. But a lot of people find that they like it better when they go to YouTube and watch it on our YouTube channel. You can go to themoneyman.com and you can watch it live right now.
Okay. Hello, everyone.
Yes, and this is the beautiful Alicia, and I'm Dan Frischberg. And the main thing I want to ask today is this. I've been looking at the offerings on YouTube, and I see a lot of things about the basics of investing. And people are watching those things. They get 1 million views, 5 million views. So what's the big question in your mind?
The big question for me is, what is the market X-ray saying to you right now?
Okay. The market X-ray is saying to me that I was expecting to have a little bit of a rally, which we have had for a few days. And I was expecting there to be some buying. But we're in what is rolling over, and I'm seeing more and more.
Wait. Rolling over.
Explain. There is rising selling pressure. Mm-hmm. People who own stocks are looking to get out of them. They're saying, based on all this stuff that I'm worried about, Russia and China, and the fact that we have a government that's doing everything wrong, and they're punishing people for being productive, and at the same time they're sending money to everybody else to make them buy things. And so we have falling productivity and rising demand to buy things.
Okay.
So of course the prices are going up. Mm-hmm. And then the government says, oh, this is happening because of supply blockages, because of ships are not coming and people are not driving trucks and delivering. That's not correct. If it was that, then only the things that are in short supply would be going up in price. Mm-hmm. If there's plenty of bacon, why is bacon going up 25%, 30%? Plenty of eggs, they're not having trouble with that. Everything is going up in price because the dollar is worth less because they're managing poorly and they're just lying to you. So what I see is, I've been for years studying demand and supply, not because I want to predict what's going to happen. It doesn't give me a crystal ball. But what it does is it tells me, is there more demand driving the price of stocks?
Meaning people, investors selling?
Demand, buying stocks. Is there more demand for stocks? Mm-hmm. More and more people would rather own a company than the cash.
In a normal
scenario. They don't want the cash. They don't want the cash. They want to own the company. The company's getting to be worth more and more. But when you have doubts and you're worried about the future and you have doubts about how profitable things are going to be, and you may end up in a war and you're having an economy that's being managed stupidly and the value of assets the value of cash is going down and prices are going up, and people can't afford things, and it gets to be worse and worse. What I'm saying is, it's not about what I think should be happening. That's what most investment analysts do. They try to tell you what should be happening. I'm not worried about what should be happening. I'm telling you what is happening. And that is more and more selling is going on. They're not holding out for higher prices anymore. They're selling their stocks. They're not buying because people that were anticipating and wanted to buy and own companies are now saying, in view of all the doubt I have about the economy, in view of the doubt I have about the future growth, in view of the fact that we may be in a war any minute, I'd rather have the cash than the money, even though the value of the dollar is going down, right? Mm-hmm. All I know is Russian forces are 70%, and Russia and China just had a nice little meeting where they're thinking about the new form of democracy. A lot of people would rather have the cash than the investments right now. There's more selling, less buying. That's the bottom line. And it's been going on. When it just happens for a little while, it's a little bit of a pullback. It's an opportunity.
Ah, so you're talking short term.
Yeah, but this is not happening short term. This has been going on for a year. Mm-hmm. The selling pressure has been going up for a year. Mm-hmm. The demand for companies, for stocks, the demand to buy stocks has been falling. Mm-hmm. Less and less people want to hold them. And of course, you're seeing that in what they're calling volatility. Volatility means up and down. What's happening is falling stock prices. A little bit of a bounce here because it was so much selling, they were kind of running out of sellers temporarily. Mm-hmm. A little bit of a bounce, and I think it's going to continue down. Why? Because the Fed's going to come in a month and start jacking up the interest rates. The Fed is going to make interest rates go up. Mm-hmm. They have been feeding the banking system and feeding the economy cash because they've been buying bonds. What they're calling in gibberish, we're going to reduce our balance sheet. What they mean is we're going to start not buying those bonds. We're not going to finance it. There's not going to be excess money in the banking system anymore. People are not going to have excess money.
But they just did it. So they're just joking.
They're lying. Mm-hmm. Yeah, right. But this is now. This is this month. Remember that they're worried about inflation. They're not going to be able to get rid of inflation if they just keep buying these bonds, right? And putting more money in the banking system and having more cash chasing those few goods. They say they're going to do something about it. They say they're going to make sure that the long bond interest rates go up and not down. Mm-hmm. What they're saying is, and what I'm telling you is, it is not possible on this earth to have an economy that runs right when the interest rates that people pay to borrow money are lower than the rate of inflation. Think about that. The prices of everything are going up, which means if I lend you money, by the time you pay me back in a few years, I'm getting back, I lent you enough to buy a Mercedes-Benz, and now I get back an amount that's a little bit more in the number of cash, but it's only enough to buy a motorcycle now. You see? Because the prices of everything went up. Mm-hmm. And that's what's going on. And of course, that makes people say, investing is not a good deal. This economy's not running right. We can't possibly have an inflation rate that's 6 or 7%, and when I lend money to the government, I only get 2%, right? That means I'm paying them to borrow my money.
So given the scenario, what should, for all the people out there who thinks that they should be or want to or could be rich, so in this scenario, what are the things that they need to learn or do or understand?
Well, first of all, don't throw your money away when selling pressure is rising and demand for stocks is falling. Each company is a unique company, but stocks are a commodity. And when there's more selling than buying, they will tend to trend down. Now, one of these days, we've seen how stock markets start to rally. What happens is selling, you get so much selling that you run out of sellers. Cathartic selling episode. Everybody finally gives up and wants to sell. And a lot of people thought maybe that was happening a week or so ago.
Monday. Last Monday.
Last week. But
Not enough.
it wasn't enough. Because now we see as soon as people start to buy, more people come in and sell. They're not sold out. There's plenty of people that still wish they had fewer stocks. And the selling pressure is continuing to rise, and the demand for stocks is continuing to fall. Eventually, and it could be a year, 2 years, 3 years, I don't know. But whenever we finish having that selling episode, and we've been through this before, when we finish, what's going to happen is there will be that cathartic selling episode. Everybody will panic and everybody sell at the same time. 90% of the volume will be down on a big down day. And then the next day or so, 90% of the volume will be up. Because what happened was the prices got low enough that a lot of people just said, you know what, I can't see how I could lose money now with these stocks being so cheap. I don't care how long it takes. I've got to make a lot of money, so I'm going to buy. So then you get that 90% up day that follows the 90% down day, and that's showing you prices got low enough to attract real interested buyers, and that the buyers are motivated, and that's not happening now.
Not happening.
Not happening. Selling pressure is rising, demand is falling, and we never got enough demand to show that there was any kind of sustained upward move. We're still in the middle of this selling episode, and that's because the stock market doesn't usually make money when the central bank is raising interest rates. The conditions, usually they're doing that because they think the economy's overheating and they want to slow it down. And that's what they're saying they want to do now. Mm-hmm. So why would I invest when they want to slow down the economy? They're going to make everything priced lower. If I hold my cash, I'll be able to get better deals. And eventually, there will be that cathartic selling followed by real motivated demand saying, prices have gotten so low that I have to have it right now, and there will be intense buying, and that's when you want to get back in again.
Okay, your wisdom is very well received. I hear a lot of people sending me some emails to learn more. And there's another question. How could you possibly...
We got to stop for a break. Is that okay? We'll stop for a break, and we'll come back for your next thing that you want to talk about.
That's correct.
You want to tell them what it is, and then we'll come back and answer
Thank you for your wisdom.
Yeah, but tell them, what's the question you were going to ask?
They ask, how could you possibly get rich investing? Elaborate this. How could you possibly get rich investing when you are doing exactly what everybody's doing?
In other words, I see millions of people watching this basics of investing where they say the same old thing that you've heard a million times. And I'm saying if the people that are already doing it, which is everybody, aren't getting rich, how can you expect to get rich doing it?
Folks, we'll be right back after this important message.
Each week in his live video market and economy update offered to his inner circle, Dan Frischberg delivers the in-depth, professional version of his famous Market X-ray report, live and interactive. Now that means you get to ask all the questions you want. And if you can't make the live meeting, you can watch the report on demand. Then email your questions in and Dan will email the answers back or include them in the next live report. Week in and week out, Dan brings you the ideas and specific stock picks from his friends, the people you see on TV and read about in the papers. You'll see what they're buying, how they're hedging, and when they're taking money off the table. At last, you'll get to see how the insiders negotiate the institutional macro bonds that billionaires on Wall Street rely on, the ones almost everyone else never even heard of. When you become an Inner Circle member, Dan will share with you his lifetime of experience and guide you to the best teachers, the best stock pickers, the best option strategists. And you'll be invited to exclusive working vacations in beautiful locations for the Inner Circle only, where you'll rub elbows with some of the most famous investors on Wall Street. So, how do you value the lifetime of skill and experience of a top investor on a mission to share it all with you and help you become one of the few winners? If you've been listening to Dan for a few years, he's likely already made you tons of money, or even more important, saved you from losing a fortune. Now, there are limits to the capacity of the online video sessions, but right now, for a limited time, Dan's offering you the position of charter subscriber, get this, for less than the price of a cup of coffee a day. For all the info or to subscribe, just simply click on themoneyman.com. Themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Okay, this is the MoneyMan Report again, and we're going to have a workshop on impact investing. And I'm going to be able to show you these things that I'm talking about right now. And we're going to talk about your opportunities of what are you going to do after this big sell-off. And when it's time, you understand that our economy has been running for hundreds of years, and we always recover. That doesn't mean I want to hold on to stocks as they go down 20, 30, 40, 50%. But I am going to get an opportunity, and I already know some of the things that I want to invest in. But now is the time to preserve your capital. These guys want to upset your economy. These guys want to have a new brand of capitalism where they take over power, Russia and China, and America falls back. And one of the things they want to do is mess up our economy. They want a stock market crash. They want an economic crash. And they're going to see if they can't upset everybody enough to make that happen. Right?
Okay, so you said you want an impact investing session?
Yes.
And so
it's going to be a workshop on impact investing. That means how to get huge action out of your money. And I'll give you an example of how that's done. Just for, Bill Gates invented Microsoft, and everybody's very impressed. It was a wonderful invention. That company continues to serve humanity, growing faster and faster all around the world. But you know what, Bill Gates, when Microsoft was worth $250 billion, Bill Gates had already divested almost all of the money, and he only owned 1.5%. But it was worth $80 billion. 1.5% of Microsoft was $4 or $5 billion. How could he be worth $80 billion? Well, the reason is because when he sold the stock, he kept warrants that would allow him to buy into the stock again. They locked in for him a share in the upside of that stock. As the stock started out at 50 and then it went to 70 and to 100 and 150, Bill Gates had the right to buy that stock when it was 50. He had the right to buy that stock at 60 and 70. These are the same long-term options that the employees at Microsoft get. And you know that when somebody works at Microsoft, they always retire as multimillionaires when they're 40 or 50 because they were receiving those long-term options. Now, those are not the kind of options that you see kids on Robinhood 1 month and 2 months trying to spend a few cents and guess what's going to happen next. That's not what they're doing. They work at Microsoft, they understand Microsoft, and they get a warrant, an option. When Microsoft is at $100, they've got an option to buy that stock at $120. But you understand that when that stock goes to 200, that little option is worth $80. It might have been worth $1 when they got it, but now it's worth $80. So what happened with Bill Gates is he owned all the upside of that, and he got rich, because his money wasn't tied up in the past of Microsoft. He only had a share of the future upside of Microsoft. He got to share in millions of shares on the upside of it. Now, here he was with $80 billion net worth when Microsoft was worth $250 billion. How is it possible that only a few years later, Bill Gates' net worth is now $160 billion? And remember, he just got a divorce. His wife's worth $16 billion. How did they get $90 billion? They're working on charity. They're living in Hawaii. How did they make $90 billion? Well, you're buying a index fund and making 7%. Think about that. You're saving a little money, you're making 7%, and maybe when you're 80 years old, you'll be able to take your grandchildren to McDonald's.
So who distribute this information?
Well, we are distributing some of it. Nobody wants you to know this stuff. They don't want you to know it because they want you to be stuck right there, having them sell you these index funds and sell you insurance and manage you all this stuff. So they're telling you these things, which we call Wall Street lies. We're going to have a workshop, and it's coming up in 2 weeks. And you're going to see, we're going to have it up there. You can... it's going to be up there on the MoneyMan.com. You're going to have the opportunity to sign up for it. It's going to be free, folks, free. Why are we doing it for free? Because people don't know how to participate in the most wonderful economy that's ever been invented. They don't understand. Capitalism means accumulating capital, having the capital work for you. Not selling your time for money, not working, not cleaning people's houses, not being a secretary, not being a clerk. You can do those things to get a little money. But what you want to be doing is buying the upside of a company, just like Bill Gates did.
Future upside.
Yes. In other words, here's Microsoft, and Microsoft is at, what, $320? Mm-hmm. I don't want to pay $320 for a share of Microsoft. If I only have $1,000, I can only buy 3 shares, right? And what I'm really buying there is buildings full of people and the past. They already made that money. What I want is, if it's 300 now, I know in a few years it's going to be 600, 900, right? Because it's growing and its influence is growing all around the world. I want to be able to lock in and buy those warrants, multi-year warrants, that allow me to have the upside. If I have the right to buy the stock at $350 at the time that it's $330, I may only pay $10 for that, 3 cents on the dollar. If I'm paying $10 and I'm buying $10,000 worth, that means I'm buying 1,000 shares. What is 1,000 shares of a $300 stock? That's $300,000 worth of that company with all those employees working on my behalf, right? That's how you make money. Because that stock, I'm only paying $10 for that thing, and I have the right to all the upside on Microsoft above $350. When that stock is at $600, it has gone up $250, and I only paid $10 for all that upside. I just turned $10 into $250, and I've turned my $250,000 worth of that company into maybe $1 million or $2 million because I bought the upside. My net worth is growing like Bill Gates' net worth is growing because I'm doing the same thing he's doing. Impact capitalism. Impact management of assets. That means find the right thing, find the right company that's growing in value, and then find a way to buy the upside. Make sense?
Future upside.
Right. If you don't understand this by listening to it on this podcast, on the radio here, you will understand it when you watch my workshop. And it will change your life. And that's why I'm doing it for free. Why? Because I want to change. I saw the country falling apart and people don't understand. They think it's not fair. They don't understand the economy's fair, but you get rewarded for what you do. And the smarter what you do is, the more you get rewarded. By the way, this is my book, and Alicia's book. It's written by Daniel and Alicia Frischberg. It's called what?
Now it's your turn.
Because now it is your turn. We're going to come right back right after this little break, because I want to talk to you just a little bit about some of the lies they've been telling you and how obvious it is. You know already what we said before. If you are doing the same thing everybody else is doing and they're not getting anywhere, how do you expect to get rich in the greatest economy ever existed in the history of the world? And it's not making you rich, but it's making Bill Gates rich. And it's making the beautiful Alicia rich. And it's making people that use their brains and use their money, their capital, to have an impact and change people's lives. Millions of people's lives, not a few.
Folks, we'll be right back after these important messages.
Stick around.
You've heard it said right here, with enough leverage, you can multiply your investing strength and move mountains. So think about it. How'd you like to own companies like Roku or MasterCard or Raytheon and put down as little as 5 or 10% to unlock the treasure chest of unlimited upside gains? You can, all the while drastically reducing your risk, and you can do it with zero borrowing costs. You just need that leverage and a little know-how. So Dan Frischberg is going to allow you to pick his brain to better understand the concept of leverage. These are special online training sessions called the Pick Dan's Brain Option Service. You can use just a little bit of money to potentially make incredible returns. If you want to make real money, you owe it to yourself to take advantage of this once-in-a-blue-moon opportunity. All you have to do to try it is to go online and register so you can see the results for yourself. The cost is next to nothing, and look what's waiting for you. Each week, Dan will discuss a few detailed trades, quality, actionable trades. You get detailed instructions on buying and selling specific put and call options. The Pick Dan's Brain Option Service shares specific underlying stocks, expiration dates, strike prices, and shows you how much money you could make instantly. It's Dan Frischberg's time-tested, proven money-making discipline that he's used for 50 years to make himself and a lot of other people rich. Lots of other benefits are waiting for you, too, if you just register at themoneyman.com. That's all one word, themoneyman.com, for the Pick Dan's Brain Option Service. This is about teaching you the knowledge and skills. It's your responsibility to apply these skills and knowledge to your specific situation. It's too much to detail here, but all the info is right there at themoneyman.com.
You're tuned in to the MoneyMan Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
Okay, welcome back. This is the Money Man Report, and I'm Dan Frischberg. This is the beautiful Alicia, and we are announcing that our new book is out. In hardcover, it's $22, I think. In softcover, it's only $15. You can get it on Amazon. We would love to have you read it. I'm sure it's going to make a big impact on your life. And to give you a taste of what kind of information you're going to get in there, we're doing a workshop, a free workshop. You can sign up for it on themoneyman.com, and it is about impact. It's about having an impact investing, impact money management. So let's talk about some of the lies they've been telling people who are going and taking these things on the basics of investing. So
they tell you to invest only in things that you know.
All right, sounds common sense. You read that all the time. But think about this. If you're only investing in things you know, you're living in the past, right? Mm-hmm. Does Goldman Sachs Morgan Stanley, do they only invest in things that they knew about already? If there's stuff that's really happening big and they're not involved in it, they go to that MBA guy in the top of the Empire State Building and they say, what the heck are you doing? Why are we not in there? And if he said, well, I only invest in what I know, that's what you told the clients, right? They say, you need to go deliver garbage. You do not belong here in the top of the Empire State Building. We don't invest in what we know. What we do is we realize who's making an impact, and then we find out everything about it. Of course, we invest in what we know. But the trick is we know more every day. We see what we need to learn about, and we learn about it.
They find a way. They find a way what people want and need and supply it to them.
That's right. Instead of buying into an index fund because of the big lie, which is nobody can beat the index fund, so just buy a thing that's full of has one of everything, and because you're too stupid to have a strategy where you own an important company and it makes you a millionaire. What you should do is just get one of everything and settle for 6 or 7% a year. And when you're 80, you can take your grandson to McDonald's.
And if you stick on only things that you know, you are not going anywhere and you're living in the past.
That's right. You want to live in the future. You want to live in the things that you're going to learn right now.
It's the same way like you're too dumb to know anything. So just buy pretty much everything.
So I want to tell you about a company, but we're talking about Hercules Capital. Now, Hercules Capital is what they call a business development company. They lend money. They do initial lending money to somebody. They find somebody that's got a great idea, and they lend them money. They get a good interest rate, 9% or so. They give them the financing to actually build out that idea, and they get warrants of the type that I'm telling you you should get, so that they own a big piece of the upside of that company that they helped to create. They're frequently called mezzanine lenders, except they do it even smarter because they get that impact, they get that upside. They've got over $2 billion in managed assets, but what they do is critical life science technology, and they've been fabulous at picking out the companies, the new companies that are startups coming out of Silicon Valley, mission critical life science technology, new vaccines, gene therapies, revolutionary cancer cures, stem cell treatments. They find the best guys that are doing that. They lend them money at a decent interest rate. By the way, it's variable so that if the interest rates go up, they don't get stuck. They lend it to them, but they get the upside warrants, to the right to the upside of that company. And that's why the company is so profitable. You can buy into that company. Now, right now, I don't want you to buy it. It's called Hercules Capital. And by the way, it's a business development company, which means the rules are they have to distribute 90% of the income that they make, paying it out in dividends to their investors, because it's a business development company. But of course, most of the money they make is in those long-term options, those warrants. They don't have to distribute that. That's why the company's getting bigger and bigger and more profitable and more profitable. And that's why we want to own it. Now, right now, the company, the stock is selling for more than 1.5 times the book value because they're doing so well. But when the market sells off, every once in a while, and this happened back last December, when the market sells off, sometimes it gets down to as low as 1 time their book value or even less. That's when I'm going to buy it. If you bought this stock when it was selling at 1 times its book value, you've made a lot of money and gotten a great income of maybe 9 or 10%. Mm-hmm. So it's worth doing, but you want to be patient and wait, because you're going to get that sell-off in the stock market. The Fed and Russia and China and the Biden administration and all those idiots in Congress, they're going to arrange for you to have the stock market crash that lets you buy this stock for way less.
And don't let anybody tell you you're too dumb to have strategy like this.
You don't need to diversify because you're too dumb to know something. But what I'm telling you is don't buy it because I told you about it. I'm telling you what to read up on. You can learn everything about Hercules Asset Management. You can learn everything about it by reading up on it.
Hercules Capital.
Hercules Capital, yes.
That's right.
All right.
Okay, folks.
In the
That's
end,
it.
here's our book. Go and buy the book. Go on to my YouTube channel. Watch YouTube channels. And if you like what you're hearing, hit like on that YouTube channel. Hit like so that the world knows that you like it. That's all the time we've got, right?
That's it for now.
All right. Don't
We'll
forget,
see you
go
in
to
2 weeks.
themoneyman.com and we'll see you later in the week.
Yes.
Thank you, beautiful Alicia, for inspiring my life.
Thank you, Daniel, for contributing to the whole world.
We'll see you next time, folks.
This has been Now It's Your Turn with the Money Man, Dan Frischberg. If today's program piqued your interest, there's a video link and QR code on this page for a free workshop that'll teach you a lot more. Or you can find it on Dan's website. Just look for themoneyman.com/golden rule investing. That's themoneyman.com/golden rule investing. Now, if you're only hearing the audio, everybody agrees it's much more exciting and easier to follow on video. There's nothing to it. Just go to YouTube and type in the Money Man Report. You'll see that QR code and the link right there for that free workshop. And by the way, if you subscribe, you'll be personally notified every time we produce a new video. So we'll see you next time. If you missed anything, all this info resides in one place where Dan Frischberg lives. The address is themoneyman.com. It's all one word, themoneyman.com.